We'll get started. So, welcome back, everybody. First time in a couple weeks for the Back to Basics. Um, so I was off on a trip to Vancouver for Corebridge. Corebridge had their rewards trip. So for production from last year, you hit 110,000, you go to 3 days. You hit 165, you go for 5 days. And, I was blessed to hit the top marker. So I got to stay for 5 days. They rented out the aquarium, the Vancouver Aquarium. So I got to see some cool animals. And yeah, it was a good time. It was a nightmare getting home. So Sunday night, or excuse me, I was supposed to leave on Friday. I was supposed to leave a day early because we were going to take vacation after as a family to go to North Carolina, Outer Banks, North Carolina. Well, my flight was supposed to get there at 1:30 in the afternoon on Friday, and I'd fly home and I'd get home by about 11:30 p.m. Friday night. Well, the flight didn't land in Vancouver until 8:30 p.m. instead of 1:30, and I had gotten rerouted on a new flight the next morning at 6 a.m. That got delayed by an hour and a half. I missed my layover, and long story short, I got in bed at about 1 o'clock Sunday morning. Then the next morning, I had to go right back to the
Yikes.
airport and fly to Raleigh to take my family to Outer Banks. It was a nice trip, but it was also something that we were doing as a family because our niece is unfortunately their mom just passed away. My 40-year-old sister-in-law. When people say they don't need coverage like we provide, is a lie. I unfortunately wasn't in a position where I could sell her life insurance back in the day. She wouldn't have qualified for it anyway. But when you come across these situations, it's just kind of
Mhm.
brings you back to home. So I'm glad to be back. Glad to be back at it. The family is doing well, and the wife came home, so now the dynamic in the household is much much better. So we are all good. Couple quick commercials, if you will, as we get started here. Now, again, this is for you guys. So every time we do the Wednesday night trainings, I tell people come with questions, come with opportunities, come with case designs and things that you want to see to help your practice. The more formal training is tomorrow, where 4 o'clock Central. We're supposed to have Lafayette on tomorrow with the pension team, but he had to cancel unexpectedly. So I'm going to be coming up with something myself for tomorrow. So we'll see what kind of magic I have from a sales idea or product or something. So these are consistent. Now, what I will say is that when you register for the trainings you should get an email, and with the email it should say, put on your calendar, Outlook, Yahoo, or Google. I don't know why they just picked those three, but if you put it on there, it'll put you in for all of them, so you get reminders as opposed to having to see my ugly mug in an email every single week. But nonetheless, speaking of emails, I did want to share with you if you guys saw the newsletter or the weekly update, I guess you would say. This is meant for training purposes, so I'm going to have more of a very basic lineup for the weekly emails on what's going on from a training perspective. And if there's any updates, we'll put that in there as well. So this is one of the updates that I wanted to share with you guys. We are doing a summit. So I think I put the word summit. Yeah, summit here in Nashville. Really designed and meant for those who are looking to enhance their practice. It's for My affiliates, top agents, people who are just interested in growing in this industry. So we rented out a room. I think it's actually right here, the UBS Tower, in the heart of Nashville. And so anyone is more than welcome to come, but you have to actually click here and it'll bring you to a link or a page to have you sign up. Now, not paying for hotels. We'll have some food throughout the meeting. It is Saturday 9 to 4, and then at 5:30 we have a suite rented at a AAA baseball team called the Nashville Sound. So we'll be going to a baseball game and just enjoying the suite, enjoying, opportunity to just see some, minor league baseball, just a little fun time for everyone to kind of network and socialize and just have a good time. So if you're interested, I know a few people on this call already have registered. Very excited to see you guys. And so it'll be good. On Sunday, we meet from 9 to probably about noon. So we'll talk about some sales ideas, some marketing stuff. So to kind of get you moving forward, if you are an agency owner, we'll talk about, recruiting or growing your organization, how that works. And then also, we'll talk about some collaboration opportunities. So again, one of the big things that I've always talked about is people at the bottom compete, people at the top collaborate. So if you are in the right boat, the right ship, however you want to say it, we're here to help each other win. Much like tonight, I got people from all over the country, East Coast, Central Time Zone, some West Coasters usually show up too, and stuff like that. So, again, the idea here is to share different ways that you want to grow. So, what I would encourage is I have a chat session on my other monitor. So if you want to put questions up there that you want to talk about, we can do it there. If you want to open mic it, you can. Um, and so I'd love to hear any questions that people want me to kind of talk about. I know Gloria gave me one offline that we can talk about, but I just wanted to gather the thoughts on anything else that people had in mind before we get started. Nothing. Nothing at all. All right. So we'll
Yes, sir.
dive in.
I do
Oh,
have
go.
some, but
Yeah.
I'm sorry I was got so busy for the last 5 months in my other things, and I did not have a chance to follow up where we left. So I do have question, but I was like, maybe I'm not the right person. Let me just be quiet for a while. Let's see if somebody else has a
Oh,
question.
no, no. This is, like I said, this is a spot for everybody to learn. So what questions you got? I'll write them down and we'll kind of go line by line
I
and
think my main question is about how to use the platform. I think you showed me once in our one-to-one session, but I was wondering is like, how do I understand the concept. I've told you I passed the exam and everything. Now I want to start learning about it.
yep.
But before I do that, I was like, how do I get myself trained into, okay, this is the platform? Because I know you helped me to sign up everything. And how do I start? My main thing is at the moment is, okay, I have the knowledge,
Hmm.
but I don't know where to start now, if that
Okay.
makes sense. The
Yeah.
like back to the basics. Okay, let's say you have a question. If I use myself as a client, if I said, okay, Vipul, you're a client, you're 44 years old, you're doing this, blah blah blah.
Hmm.
If I have all of my information, first thing is
Yep.
I want to sell it to myself. Okay, how do I run my own illustration, sell it to myself? Because if I can't, it's like it's an Indian analogy, like the we call it halwai, the one who makes sweets. If the person who makes sweets don't eat his own sweets, how can he sell it to somebody else?
It's a fair statement. And so what I would probably kind of expand on that from a phrasing and probably say prospecting is a good way to do it. Like you got the know-how, you know what you have at your fingertips. Now, how do you take what you learned and actually execute? Is that a fair way of putting it?
Yeah, absolutely. How do I put it in practice to using the tools which are available to us? One thing is, I have a bookish knowledge,
Mhm.
learned, but I don't know how to put it into practice to analyze things and present my facts and figures and then take it from there. So that's where I need guidance, like back
Okay.
to basics.
Yep. And that's a great you know, opportunity for discussion. I think that's a solid question to ask. Really, you know, and the fun part about our job is that we have more of an emotional sale. So really, when you think about uh, what we do is based off of emotion. And I don't want to say fear because some you'll see some people online kind of fear mongering with tariffs, World War III, better get your money into annuities and all this other stuff. And I want to kind of stay away from that because at the end of the day, we have to look at why we buy what we buy. And I always focus more on question-based selling. So when you think about the conversation, you know, I like to say you get paid to have conversations really and solve problems people didn't know they had. So understanding product is one thing. Understanding how to take that product, which we'd say is like a steak, or whatever you vegetarians eat. I don't know what that could be, lettuce, and make it smell delicious and exciting and you know, stuff like that. Joking about the lettuce thing, of course.
I thought you were going to say
Um,
avocado.
I know. No, as I say, you know, I'm trying to think. I was trying to think of something bland, and I'm like, lettuce. You know, is as bland as you can get. But, you know, so the idea really is that when you start to develop the thought process, you have to think about what I would call your prospect list. And really, what, you know, it's a tale as old as time. When you talk about, um, you know, getting into the industry, you think about different scenarios and different ways that you can go to market. And so, what they always did back in the day at the whole life companies, your career companies, they would call it your like your 100 list, or you know, write down people who are in a certain category where you think that it would make sense to talk to them. So, you know, from an oversimplification standpoint, we talk about sales ideas, and sales ideas can invoke conversation with people. So, for example's sake, if you were talking about a simple thing like term, which is should be the easiest sale possible, I would say, all right, Vipul, if you have people in your life that have a job, have kids, have a mortgage, you should be having this conversation. Are you protected against if you don't make it home tonight? If you don't make it home tonight, what is your plan? Most people have no plan because they don't want to think about that. So their plan is don't die. It's a great plan. But like I mentioned in the beginning, my 40-year-old sister-in-law passed away and two 13-year-old nieces. Now we got to figure out where they're going to go. We have a plan, but you know, nonetheless, it's one of those things where you have to ask the question to the customer to make sure they understand what their plan is. Not having a plan is a plan, but it's just a very, very bad plan. So, you know, normally when you think about term, especially if you're starting out new, this is the easiest way to get into the insurance industry and give you some, I don't want to say layups, but if you think about it, you've got, you know, a husband, wife, or I should say spouses, whatever you want to say. And usually they each buy a term policy because they want to protect if the other person dies. Most people nowadays have a joint household where both people are working. And so you have to protect that lifestyle that they're accustomed to in case someone doesn't make it home tonight. So usually what it is, the algorithm that I do rather quickly with people is 10 times your income, 150K per kid for college, and whatever is remaining on the mortgage is your number that you would basically apply for. You'd minus off any insurance they currently have, whether it is group or regular. But the idea is that it gives you an easy algorithm to think on the fly. Now, if you have someone who is more analytic, they want to do the whole, process of like, well, my Comcast bill or cable bill is $80. My this is that. We have a client data sheet for stuff like that. But the fact of the matter is this is something that you can use to build a prospect list. So if I was sitting down with you, first time, you're brand new rookie at this, I would sit there and say, okay, write down a list of all the people that you know who have a job, kids, and a mortgage, and just put their names down. That's it for right now. And we'll put it in a list. You can even put it as term. Then you have the high income earners. High. So people who make, say like six figures, people who need more ways to help retire, and people who are between the ages, let's say 25 to 50 or 55, depending on how much they make. And now you don't care about the death benefit, you care about how much can they put in, on a monthly, that's a MO, monthly or annual basis into a max funded policy. Now, with all of this, just so you know, I haven't said life insurance yet. The idea is we're using a vehicle to help you retire the way you want to rather than the way the government is forcing you to. Because if you look at, say, a 401k, the most you can put into a 401k right now is about 23,500. So if someone was making, let's say, about 67,000 a year, they can put roughly 50% away into a 401k. So once again, if you have dual incomes, that's 50% of your salary being put away for salary deferral and growth. Now, if you're making, say, 400k, that is a percent that's a lot less. Let's say, what is that, 5%? 40. Yeah, we'll just say about 6%. So, Mr. and Mrs. Client, you are at a loss because you make more money. You have to find other vehicles and other ways to help you retire the way you deserve, rather than the way the government is forcing you to in a traditional environment. So, if we can reposition a portion of your assets, what do you feel is comfortable to put away into a policy that can give you tax-free income? They can give you living benefits in case you have a heart attack, stroke, or cancer and don't make it to the retirement you think you're going to make. But then on top of that, we'll give you a death benefit. So if you pass away early, then your spouse can still enjoy the retirement they deserve with tax-free income. And so, how much do you think you could put into a policy like this on a monthly or annual basis? And for, let's say, 10 to 15 years. So now you're letting them give you the answer. So you're also negating them from giving you a rejection later. So the idea is, and we haven't talked about the vehicle yet, right? What we're doing is we're building the story so it's hard for them to overcome the vehicle. They might say, "Oh, it's life insurance. Why would I put money into life insurance?" Well, did you know? And then you build up your facts. Walt Disney used it to build Disneyland. J.C. Penney used it. Ray Kroc used it to buy out the McDonald's brothers. And then you have your facts and data to back up the story as to why this makes sense. Now, if you don't have a high income earner or you're high, you have just you're gonna say something, Vipul?
Yep, I think it all makes sense because a lot of people don't understand that life insurance can be used as an investment vehicle,
Yep,
and also from a long-term perspective, it can with some of the, and I don't know the exact facts, but I think when we were discussing earlier, if you choose the right vehicle, it can be also used to give it as a gift to your children.
yep, yep.
Like if you don't want to use it, you just let it sit there and your children can reap the benefits.
Yeah, I
But
mean, I did a combo of death benefit and accumulation. Like my kids, I gave them $250,000 policies with $2,000 as the annual premium, and the target's like maybe 1,400. So I'm not super funding it. They could put about 7 grand into it if they want to, but they can do that later. But right now, I'm giving them a mixture of death benefit in case they need it, God forbid. And on top of that, if they don't do anything but just fund 2 grand for a total of 20 years, they can still pull out 20 to $40,000 tax free during their retirement. So it's that's what you call your singles and your doubles. You're not going to make a ton of money off of juvie policies, but it gives them something to think about. And we also want to make sure we take care of the the parents' retirement first, because let's be honest, they have a shorter horizon to get to retirement versus the kids. So these high income earners, they have
Mhm.
that horizon to do so, but some people may be on that lower end, not 400K, but maybe 100K, and you want to find something where they can do three, four, or $500 a month for
Yeah,
themselves and something smaller for the kids.
I think it's also for high in net worth individuals who wants to give something to the kid, but not immediately. And I
Yep.
think this is another vehicle where like they will get it after you pass away. You're building an estate for them.
That is, there's different ways to do that. Yes. So those are gifting strategies and stuff like that. You can
Hmm.
leverage trust designs and stuff. So if someone has kids that they're worried they're going to spend through all their inheritance, well, you can label it inside of a trust, put a W-2 or K-1 provision on it. Let's say you want them to, and I've seen this, so I'm not saying it to be a jerk, but like I've talked to some Indian families who want to make sure their sons marry an Indian girl. And
You are not making it up. That happens
I,
absolutely.
yeah. So
Yeah.
if I built a wealth and I want to make sure my bloodline is pure, as archaic as that could be, but again, that's to each and to their own. You can put parameters around stuff like that. So that is legacy and gifting planning. So someone who makes like 4 or 500,000 and wants to put $18,000 away per year per kid, you can do that, buy a policy on the parent, and then have that inside a trust that is run by a trustee and not by an insurance company or the kids. So there's definitely ways to do that. Um, but as you can see, even from the standpoint here of building a prospect list, now I have someone who has very basic and they can overlap. So your six-figure person can overlap with a job and, whatever. But the idea is to just start getting names down of people who can fit into these categories. Another one, which I would say is the combo sale.
Phil, on this part, I got it, but now how do I take this information
Hmm.
and put it into those where I am stuck at is I understand this part,
Yep.
but where I am stuck is this, okay, I got this information. How do I log into some platform
Yeah.
to run something, which
Hmm.
I think I got login for think for
Streamart.
those. Yeah.
Yep.
So how do I, and that's where I probably need a more personalized coaching, but I'm happy to do it here if you want me to share my screen. Like, how do I go? Okay, what I am looking for is okay, Vipul. Now, after this information, this is
Hmm.
step one. You got all the
Yep.
information.
Yep.
Step two, type www.xyz.com, click
Hmm.
here, log in here. This information which you got here goes into this field. This information goes into this field. Then you press this button, and this gives you, and that's what
Okay. Yeah,
I'm
I mean, that's pretty easy. I'll finish this
not,
little
it's not.
combo.
Yeah.
Yeah, you'll see after a while it'll become second nature. So, and I'll give you little tips and tricks here. But I'll finish up with this little sales idea for again a prospect list for people too. If you think about people in their 40s to 70s, maybe their focus is not on max accumulation, but more on protection. Okay. So protection and a combo of long-term care or chronic illness is a huge conversation. So some people might say, well, I'm not going to get the returns I want with life insurance. I want to stick to the market. Perfectly fine. The big thing with the sales here, you have to use the phrasing of supplemental and not say it is an investment. Okay, it's a supplemental retirement plan. It helps supplement and complement other assets because there are people out there who are trigger happy to sue. We all carry errors and omissions, or you better, to cover against someone who tries to sue you for wrongful practice. But the fact of the matter is that you have to watch your wording because it's always about cover your own, you know what. So the combo sale, when I say combo, I'm looking at the mixture between protection and death benefit. People know what kind of death benefit they want, and they also want to protect themselves against ailment or issue like long-term care or chronic illness. So, and they probably favor more guarantees than they do, super cash accumulation, which we can do. So those are usually the three main ones. When you talk about it, then you have the unicorns like the estate planning, high net worth, stuff like that. So we won't go into that today. But if we go back up to this screen, and I'm going to bring up the platform of Three Mark. So our system right now is through Three Mark Financial. Now I will share with you guys too. I am working on my website. There's an advisor login. So when you sign in, I don't know if I have myself even signed in yet, but let's see. Yeah. Once I approve myself, what you're going to see is we're actually integrating some of the stuff from 3Mark into the Valor back office. So if I need to integrate more things like different annuities from other platforms, I can put it all in one spot. So there's a lot of stuff that we're doing behind the scenes from a tech standpoint. So more to come with that. But so for right now, you would log into 3mark.com, you would register here, who referred you. You could just put Phil Resch or Valor. Anyway, it's fine, but you hit login and now you're into the back office. Okay. This is where you can see several items. So you could check your cases, you could check your underwriting, you could check annuities, and all these different things. I will say that we have this set up as one of the videos. So on the YouTube channel for Ad Valor Financial, we do have some information in here. So Vipul, this will be up on this after, but also, we have getting started with the back office, how to run LERPs, and how to illustrate income and death benefit IULs. So that can help out too. But where we go from here is you got your client information. Now you want to go to quotes. So if it's term, we want to click right here where it says term/UL quotes, and you can go right into iPipeline and hit launch now. And this will give you all carriers, respective of whatever you're looking for. Now, I'll explain a couple things here, but let's use me as an example. Date of birth, male, I'm in Tennessee. Let's do a 30-year duration and $1 million. Health class, we're going to pretend I'm preferred today and get quotes. So you'll see this is all annual. If I want to change it, I just go to monthly and you'll see. So Corebridge for $1 million term is 158.69 a month. This is the selected term. This is not the living benefit term. So 159.69 is your cheapest at preferred non-tobacco. Now here we actually have the QOL. So 167.28. So for $8 extra a month, you're able to get full living benefits, full conversion privileges, and it's like one less Starbucks a month. So you're competing with the big boys when it comes to cheap term, and you still have the ability, you can hit apply here and go right to the application as well. So for the prospect list for term, you can go here. As I've mentioned before, I usually talk about a core five. So Corebridge, the QOL version, Columbus, North American, we've got Symetra and National Life Group. They're all on this, but you will see if you have someone who's just a termite, they want the cheapest term. You know, Banner has pretty junky conversion privileges. Select a term after 10 years, bad conversion privileges. Symetra, you can add a rider, which increases the cost by 2 to 3%, but that's only for 7 years. Protective just doesn't really have good permanent products.
Okay.
The,
Phil,
so,
if we don't know these things by heart as you do, is
yep.
it possible that there is a comparison sheet to say these are the benefits? You know when you buy anything on online, it says compare products, and it says these are all the feature. If you buy this plan, this is a take. If you buy this plan,
Let's see. I've never checked this before, so let's see what it does. Download selected products comparison ledger. Let's see what this does. Because you're right, I know it by the back of my hand. So let's see. It's just comparing price. Let's try again. Detail report. Okay. Now we're cooking with gas. Converted to any universal life policy issued in the first 10 years. So there's that. Renewable and convertible term life, which provides level premium after the level period, coverage amounts reduced. Convertible for the duration of the guaranteed level premium, whichever comes first. It doesn't say what it's convertible to, but it's a really bad product. So it does give you some in the detail report, not enough to be an expert right off the bat. So that's why I say, like, from my standpoint, I like to stick with the core carriers that I mentioned. And if you want to get rid of some companies, like say you don't want to show Banner, I can get rid of them and they're gone. So you can modify this too. But this is if you need something quick, need pricing quick, or someone's like, hey, I need 250, 500, and $1 million. I would say, okay, I can add another and another as well and send that out to them. So if they're spreadsheeting me. So that's just term. Term is real basic. So if we go to WinFlex though, so WinFlex Web, this is where we go into the permanent products, and you can run an individual term through this as well. So if you have a client who you want to show them QOL Flex term, you can just run it in here and you don't have to show the whole spreadsheet. So if I hit start
sorry, where did you go? WinFlex, is it?
quotes, WinFlex
Yep.
Web, and then it single signs you in.
Okay. Yep. I'm sorry. I'm just following you as you're doing. I'm logged in and
Yep. So if we hit start a new case, you should get a slew of carriers already built into your system. If you don't see the carriers that you want or have, like if you'll notice here, I have American General, but I don't have the American General Partners Group product. What would typically happen is I would go into the top right hand corner, click on profile. Okay. Now you'll see 3 Mark Financial and company name. And I have no pending agencies that I'm adding right now, but if I go over to add companies, you could have the specific companies you're looking for here. So like Foresters, F&G, National Life Group would be here, but I already added them. So there are carriers here that you can add in, and then in the right-hand corner, hit place request. These arrows mean you need a agent code first before they will let you in. So, but all you have to do is hit place request, and within 24 hours, you should be able to illustrate that. Um, so this is, once again, ways where you can add the carriers, the respective carriers. North American, you have to have your agent code to get North American in this dashboard. I'm going to do a quick Ipsos switcho because I have my own version of WinFlex that I've had for like 18 years. So I have carriers, and like when I was at AIG, I had different instances of AIG. So I'm jumping into mine personally here. Same setup, it looks the same. Start a new case, but now I have the QOL version. So from that, let's say for example's sake, you want to do the easier of the two is that death benefit focused product. Like when you think about how you're designing a product, it's either I know the death benefit and I need to understand what the premium is, or I know the premium and I don't really care about the death benefit. I want the least amount of death benefit to maximize cash. So, and it goes back to the questioning you have for the client. If I am doing this, Mr. and Mrs. Client, what what do you want? Like, do you want income? If you want income, we would pick the accumulation product and not the protection product. Okay, so if I pick the max accumulator and hit create client, this would be Phil Resch, and I'm going to just say I'm 40. Okay. Date of birth is better because I'm closer to 44 now versus 43, so they would call me 44. But you can do age if you know the date of birth, it's better. Your risk class, you're going to put the risk class here. Some people will pick preferred plus right off the bat. I don't because I know that for me, I would not get a preferred or a preferred plus. So, depending on how you would field underwrite your client, Mr. and Mrs. Client, do you have any ailments? Like, if you rated your health 1 to 10, 1 being 1 foot in the grave, 10 being you're ready to run a marathon, what would you rate yourself and why? If they say like a 7, why? Well, I have blood pressure meds, this and that. I'd be like, okay, so preferred is probably the better way to go. And I'm in Tennessee. So we hit solve for, and they leave this up to your discretion because most carriers have it set up this way. Now, as I mentioned before, if you're trying to find income, we are solving for a face amount. And when I say solve for face amount, we don't want to just solve for a basic face amount. So this face solve option drop down, we want to solve for the least amount of face, minimum face, or death benefit without violating any guidelines. And if I said to Mr. Phil Resch, how much could you put into a policy for, say, the next 10 or 15 years? He says to me about 15,000. I say, okay. So I put 15,000 as the premium. Now, if I left it like this, I would keep funding it for my entire life. So I want to click on the calendar, and you can pick either total years or you could pick age. So if I want to do 65, I could. But if I do year, I'm going to do this. I'm going to double click on the max and change it to 15. So 1 to 15 is 15,000, 16 to max auto populates with a default. I'm going to double click the 9,000 and just change it to 0 and just click off of that. So now I have a short pay or a 15 pay option of $15,000 per year. The index strategy, that is subjective. You're going to see that they default these to the best possible looking illustration for the company. But I like to do probably about 20, 20, 60, majority of in the S&P, just because I like the track history of the S&P, and we have an 11.5% cap. So when you're funding these income type policies, you want to have it increasing because it allows you to stuff more money into smaller face amounts to give your client more cash. So we want to have it increasing, but we only want it increasing while we're funding it, so that 15 years. And then I'm going to double click here and change it to level. This does not automatically do it for the customer. It is for illustration purposes only. So you as the advisor have to tell people that in 15 years, if you're done funding, because they can continue funding if they want to, but if you're done funding, we have to change this with the carrier from increasing to level. So there are some bits and pieces to this that have to be, followed through on. So now I have my funding. I'm trying to find the least amount of death benefit for 15,000 for 15 years. I'm going to have my policy increasing to stuff as much as I can in a smaller policy. And then once I'm done funding, I want to levelize it, which reduces your cost of insurance. Again, maximizing your cash growth. Now I want to hit disbursements. Disbursements would be if I want to see income. I'm going to check this box here. And now the disbursements is open. So I'm going to click the calendar here. And right now I'm not taking anything. So here I like to change it to age. So age 40 to, let's say, age 64, I'm taking nothing. 65 to, let's just say, 89, which comes out 90 on the illustration. I'm going to double click the 0. I'm going to click the drop down and do solve for max. So now the software is going to calculate for me the max amount of income using the rate of return I have for these indexes on 15,000 for 15 years. What kind of income can I get for the next 25 years? So here's where I hit calculate, and I'm going to let the software work for me. I'm not trying to find the death benefit and the premium. That's too many variables. I want the software to figure out one variable for me as I have the other variable that I already know. So this is face amount reduction. That's a good question. That is another illustration device that allows you to show more income. It's not going to be automatic. That would be something that you would request to the carrier at age whatever. I want to reduce the death benefit as low as possible without turning the policy into a mech. So that would be something that the client would have to do, or you as the agent. So we're going to open up the illustration. And as you can see, it's a funky number, 266, 161. It's the least amount of death benefit. And if I look at this page where 266, 161, 15,000 is the premium, 15,000 is the guideline level. That's the most I can stuff into a policy per year. I am now going to see how much I can pull out on an annualized basis once I go to the money page. So this is where all the money is shown. So 15,000, we look at the far right-hand column. So if you looked at these rate of returns, you're averaging probably about a 6.4, 6.5 rate of return. And after 15 years, we stop funding. So we put in about $225,000. We have about 327,000 at an average 6.5 rate of return. And then at 65, we start pulling out income of around 61,000 $251, tax free. So if I look at this, I've put in over 15 years, $225,000. And in return, I am taking out 661,251 times by 25 years, or a total of $1.5 million in tax-free income over a 25 year retirement period. So that's conceptually how these products work. It does require maintaining. You'll have some people who will say, well, in the first 10 years, I've put in 150, I only have 176. In the first year, I put in 15, I only have 12,806. That's ridiculous. I'm paying a ton in fees. Well, the answer is yes, you have a lot of fees because you're paying for this death benefit. If you pass away, in year one, that's a great return on investment. 15,000 gets you 278,000. If I went to the casino and walked out with that kind of money, I'd be happier than whatever analogy you want to use. But the fact of the matter is these policies have higher fees in the first 10 years, and then they drop dramatically and the cash explodes. So you have higher fees in the beginning to pay up for the cost of insurance, to pay for building the policy, to pay for admin fees, people who are going to pick up the phone in 20, 30 years to answer your client's questions, stuff like that. So that's all built into the contract. But if you structure it right, by about the seventh year, actually here 15 and 75, so 90,000. You're at 91,000. So by year six is the crossover, and you're now in the black as the red as opposed to the red for accumulation. So, like I said, when customers see this, you have to remind them that in the first years, it's almost like an infant. You're taking care of a baby. Baby, it does not give you reciprocal love right away. You're feeding them, you're changing them, they're whining, they're crying, the whole nine yards. And you just have to keep taking care of them. Same thing with this. You have a policy that you have to feed early to give it the type of return you're looking for later. And that's what a lot of people seem to miss about this because they want the immediate return. No one thinks of long-term strategies anymore because long-term to a lot of people is a year or 2 years, and it's not the case. So we just have to remind them that this is a 15, 20, 30-year strategy, not a 5, 10-year strategy. So that is something, again, when you talk about cover your own, what, that's what you need to do from that standpoint. So this is probably the harder design. Um, so what I would encourage, Vipul, for the question's sake, we've talked about this for, a good 50 minutes, but listen to this recording again. I'm going to post it on the YouTube. Look at the other recordings as well and just kind of internalize those. And then we can set up another time to go through like some of the personal stuff too. Okay.
Yep, got it. I think
Cool.
with this, it would be because 278,000 probably less death benefits, like a combination of term and this. So that
Yep.
covers them.
And you can definitely do that. So if someone has a budget on what they want to fund into this type of vehicle, but they need a total of $1 million, you can supplement the rest in term.
Yeah.
So Corebridge has that benefit where you do the discounts and you can add the extra and get the discounts for bundling the two together. So if I did, 800,000 here, and let's say I did a 30-year term, I can do that, and it would give me both, and I would get a discount on the term pricing by putting the two together. So yes, Corebridge has the unique feature there. If, for example's sake, you're like someone else who might not qualify for great ratings with Corebridge, you might have to do a different carrier, which would mean, you could do a term policy with whoever you want and a permanent with whoever you want, whatever makes the most sense.
Philip, just coming down to the term quotes, when you go to the summary pages of these quotes,
Yep.
um, those are the annual premiums on the term quotes, correct? Not monthly.
They are, unless you look at, so if I look at the term pricing, this is the annualized total that I have it at annual because I did it at annual, but it would show the monthly up here. But if you look here, it's going to show you the discount. So you save $90 per year by combining the two together. It's getting discounted off of the term, not the permanent. Um, but yeah, if I had it at monthly, it would show monthly what the premium would be here,
Okay,
as well as up here.
gotcha.
So um now before I open up for more questions, I want to get to Gloria's question because she had a question before we even got started. And she's got a client tomorrow, so I want to respect that. So, as we all know, one of the things that we do here at Valor is we like to talk about I call it the spider web of opportunity. So, we have the life insurance, annuities, DI, long term care, premium finance, and stuff like that in one corridor. We have the health corridor, Affordable Care Act, Medicare, and my girl Gloria is our superpower person for that. She's your queen when it comes to ACA Medicare. And then we also do alternative investing. So we have a couple different projects that we partner with different vendors for. So we have one carrier who is doing modular homes, and they have a 2, 3, 4, and 5 year plan. Some people find modular homes rather risky, so they're not too excited for something like that. On the flip side, we have a regulated fund that consistently does land development for major builders like Lanier, DR Horton, and all those big players. So, from the standpoint of what you give the client invests 10,000 or more and they are automatically in this fund that is audited quarterly by the SEC. It's a regulated fund, which also protects you against things like Ponzi schemes. And it's basically about land development. So, what does that mean? Land development is digging up dirt. They're basically doing surveys, blueprints, plot maps to make sure that the land is ready to go for Lanier or DR Horton to build upwards. So they go flat, they don't go upwards. The perk on this is anytime you do any type of development on land, it gets more profitable. So it is an industry where there isn't really loss per se because of the advantages of consistently doing the blueprints, the plot maps, and things like that. It's making the land more marketable and ready to sell. Now, all of that being said, what happens is this company will basically give out a minimum of a 10% annualized return. You can take quarterly payments, or you can have it compound and continue to grow and stay inside the fund. That is a 10% floor. Now, they also have what I will just simplify it and call it profit share. So, depending on the performance of the fund, you can accelerate the returns and get basically 12 to 16.5%. And so, when I say 10% is the floor, the client has the ability to get actually 12 to 16.5%. So you'll have more opportunity from that standpoint to make more. It'll compound, continue to grow, and your client can pull the money out after 12 months if they want to. From the producer standpoint, you're
Great.
looking at, go ahead.
What's the risk?
There really isn't, from this standpoint.
Well, what's
Um,
like, is it not gonna, we are putting money, let's say it sounds interesting. Let's say I want to put my money in.
yep, yep. So
What's
what we
the
would,
risk? Like, can the company go belly up?
the company won't go belly up. They have over $60 million in the fund. And they have consistent partnerships. They've been doing this for over 25 years. So they're working with only big players. They're not working with, Phil Resch construction company. It's only the top guys in the industry who are building on massive plots of land. They're focusing on the Southeast, so Texas, Arkansas, Alabama, Tennessee, Florida, areas like that where there's extensive growth. So from that standpoint, if I felt there was risk, I wouldn't put my name on it. From giving the idea for people to use. We have a recording that I can give you guys. The company that we work with is let's see, what's the Rockstar Capital Group. So with Rockstar Capital Group, they've got the information here. So Vipul, if you want to take a deep dive into it, they have case studies, testimonials, and the investment opportunity. So from the standpoint of what we have here, like I mentioned, 12 to 16.5%, with a simple $10,000 investment, we can introduce you to the owner of the company or the investor here, who talks about everything they do to make sure the money is safe and secure. I think the big thing that a lot of people really care about is the fact that it is regulated by the SEC. Um, that being
And
said, go ahead.
once you invest initially, then
Mhm.
can you invest on a monthly basis more?
Yes, you can put more in.
Okay.
So, and I apologize. These are the states. So the Carolinas, Florida, Georgia, Texas. So let's be honest. Who really wants to go to Alabama, right, Tia? Just kidding. Just kidding.
Hey,
I
hey.
know. I'm just kidding. I wanted him. I was making sure you were still awake.
I knew you were
Um,
doing that on purpose.
so, but no, it's a great opportunity, and what I tell people is that from the standpoint of what we can offer, not everyone wants insurance, right? So if we can offer an alternative strategy where on these you get a commission of about 2% of whatever they invest, the initial investment, you get 2%. And, then they pull out the money. I give you a good example here. So if you want to talk about a funding strategy for someone to fund life insurance, and you hit a big opportunity, so you're talking to a big time baller, right? So if the client had $1 million that they put into this fund, that is roughly $100,000 in profit per year, or a total of 25,000 per quarter. Can you imagine if the client wanted to fund a life insurance policy? They take the money from this, or just the earnings from this for the next 5, 10 years, whatever, and then they keep their principal. So they've retained that $1 million. They're just freezing the asset to use it to fund something else. So, from our standpoint, how can we use our money to leverage it to give us more opportunity? That's where I see this, because we, as the business partner person proposing it, now have the ability to find ways to leverage money, help our clients not lose money, so they say, and you get a compensation on the land side and a compensation on the life side. So it's a double win for the client. It's a double win for you as a producer, for those clients who have that opportunity. Now, if you're talking about the bare minimum of the 10,000, you're talking about $1,000 profit or 250 bucks a month or a quarter. Not really the grandest of sales, but maybe it can fund their term policy, whatever. So there's more than one way to skin a cat, different opportunities, different strokes for different folks. But just to give you an idea of an additional resource that you have, once again, kind of entailing back to this spider web of opportunity, in different ways that you can supplement and provide value to your customer. As they get older, you're going to start talking more about annuities versus something like the land development. And there are other scenarios where some people might want to do the modular homes. So we have a 5-year investment for a 15% return per year for 5 years. But it's investing in mobile home parks. So some people may not like that. I like it. I've already invested in one. So I have no problem with it, but I do know that some people that I've talked to in the past, mostly of Indian descent, find a little concern in it because they want to make sure their money is secure. I'm comfortable with it. I put a good amount into it, for the investment, but everybody's different. So this is like your most safe and secure route to go from the alternative investment side. So any questions on that? And Gloria, I got your message. I'll see if I can find the video.
No, that's good, Phil. Let's say I want to invest. How do I proceed?
I will introduce you to the team. And so that way you can get a better understanding if you want, or if you're ready to invest, right here. You can apply right away, and you go in the portal, put your information in, and I would just say, how'd you hear about us? You just say Phil Resch. So, and other than that, then if you say, are you an accredited investor? Just say yes. And then you go through the process of starting to fund it. They'll create a portal for you, and you can rock and roll. So if you'd like an introduction to the team, I can do that. If you want to
Please.
just dive in, okay. I'll send an email and I'll copy you on it. So
Yeah.
yep. So guy's name is actually Rockstar. So it's Rockstar Capital Fund. His original name is Brandon, but he actually changed it. So on his license, it's Rockstar Rooks. Great guy, fun guy, but solid, knows his stuff. So I'll send the information and copy you on it. So we'll go from there.
Yeah.
And so we've kind of hit about an hour. Everyone good? Any other questions I can answer? No?
No,
All right.
pretty good. I think I found the website, so
Yeah, rockstarcapitalfund.com.
I'll use that tomorrow.
Yep. So awesome. Yeah, the big thing here is, as we kind of go through this process, understand that my whole objective is to help people diversify. There's no right way to get to that retirement, but we have suggestions. At the end of the day, it is up to the customer to decide. And I like to say the best way to do it is just give them strategies and solutions, but at the end of the day, you want them to make that decision. So, that being said, Nana, were you going to say something?
No, I'm good, Philip.
Oh, okay. I thought you were going to say something. Well, anyway, again, this will all be up on the YouTube site no later than tomorrow. So if you aren't already, feel free to subscribe at Valor Financial, and you'll always get an update on when different videos come out. So the back to basics will be these camo colors, if you will. And then also, once again, the cheap shameless plug, if you missed it, we are hosting our first ever summit here in Nashville on the September 12th to the 14th. We really start on the 13th, but it's like 9 in the morning. Sales ideas, product deep dive. We'll probably have Columbus come out as well. Marketing, things like that. There's 30 spots total. We already have about 8 or 10 filled up already. So I'm not covering hotels. We will have food that will be provided during the training. So Saturday, 9 to 4, we'll have food for the training. And then we're going to have a trip to a baseball park. Rented a suite, so there'll be food in there too. So, really it's get here, pay for your lodging, and just know Uncle Phil's got you for the other stuff. So looking forward to seeing you guys, whoever wants to attend. Again, we have training tomorrow, and it'll be a surprise. So we'll figure it out. But thank you guys for spending your evening with me, and we'll talk soon. So you guys have a great rest of your night.
Thank you.
Thank
You
you.
too.
Thank you, Phil.
Too.
Thank you.
Thanks.
See you guys. Bye.